Hello, this is Datatraderpro with a nightly market wrap for Tuesday, February 23rd. Datatraderpro is sick. He has a flu, and so I'm going to try and make this market wrap brief. When we last left you, we were challenging what was then the daily S3 pivot, or sorry, R3 pivot resistance. On the SP 500, I suggested that we would pull back from there and likely to the 20-day, which we did. It took two sessions. We pulled back just north of the 20-day and then popped up. We don't know whether this corrective move, because it looks like, the trend is obviously down. We're well off highs. Every time we make a pop, we pull back. Bear market rallies can be some of the strongest rallies, but you're still in a bear market. So we expect further down, but we don't know whether that's going to be from higher levels or from the move we got today. So today was the beginning of another down move. We had a very strong 125 point on the E-mini futures, probably roughly that, maybe a little less on SPX. Move up to close to the 50-day moving average, and then we started a rollover and pullback. I mentioned on our Twitter and StockTwits pages that we saw large distributive type block trades at the top late afternoon and just before close yesterday's session. So we suggested that was bearish, and immediately in after hours we started selling off. A very large print on SPY in particular. I think it was over 12 million shares. We'll look at that later. Anyway, we've started a pullback. Whether that's going to go in a bit of a seesaw fashion with a little higher high, or just continue straight down, remains to be seen. Let us look at the site. All right. Some of the problem lately is that with oil and the energy sector being so beat up, it's very hard for indexes to rally. And I'm not saying that indexes can't rally when oil. There's not 100% correlation that when oil and energy's down, they certainly can and have. But when you get a huge down day, 6-7% down day in oil, it's a big world market event. So generally you're going to see indexes down as well, and pretty much everything down, and then only the really defensive sectors, and even then utilities and things like that were barely up. And metals made another nice move today. Metals are holding firm. So but anyway, whether this led the move down or whether this was just part of it, indexes aren't going to rally hugely on a massively tanking energy sector. It can happen, but it's unusual. Anyway, we'll go to the market map. Excuse me. Advanced decline ratios on NYSE, not that bad really. Also on the Nasdaq combined, not very bad. So net volume is negative on both, but not horribly so. Somewhat divergent to the SP 500, where the advanced decline is worse. Certainly the NQ100 was probably the ugliest looking index chart today. The volatility space was up. Russell was down, but the advanced decline wasn't that bad, and actually Russell's price held quite firm. So the Dow similar, on a percentage basis worse, but the chart of the Dow looked very similar to the S&P 500 today. We'll go to the trend page, actually called a neutral range day. Early in the day was very subdued in terms of internals. We had a move down intraday, and then we popped back up, and it looked like we were going to hold that. And right near the end of the day, as you can see, they just dumped some stocks, some key market moving stocks. So yeah, we fell out of the earlier range, but not out of range. We're still above the 1900 level. So the DTP MCC, which is our version of the intraday McClellan, was bearish, but it was bearish all day, but didn't necessarily start out to be that bad. sort of on the neutral to bearish, with these sort of -20, -30 readings, but then continued down throughout the day. Net issues were fairly consistently low all day. Net volume trended down. Breadth, as I mentioned earlier, NASDAQ was the worst looking chart, and this is why. Net volume, so they were net sellers of a lot of NASDAQ stocks today. Although, like we said before, the advanced decline numbers are not that bad, really. So they're in the bearish range, but I would call that bearish, leaning neutral. I mean, just a hair above here would be neutral. So trends, bearish on NYSE, neutral to bearish on NASDAQ, and actually neutral on Russell. So the internal picture is not, crash scenario horror show. It's it's bearish, but it's not nearly as bad as it can get. Volatility picture. One thing that caught our eye yesterday was that while other volatility indices were down, VXST was flat to green, and that's sometimes an early warning sign. This is the shortest duration VIX index. It's a 9-day version of the VIX, and so it's much faster responding. It relates to weekly SPX options. That's how the index is calculated. So it will pick up on moves quite a bit earlier than VIX. So when we saw the block trades and we saw VXST neutral to green, when these guys were still red, we saw, okay, well, there's an early warning system. Also, the volatility, the VVIX index was neutral to green yesterday too, when everything else was down. So that's sometimes a sign. If you keep on, this is your VIX early warning system, basically. All right. We're still into contango, although it's fairly light. It's not making a huge difference on XIV and VXX right now. Let's go to block trades. Okay, so here was the big sell guy. There was a number of prints up here. Obviously we had the continuing pattern of accumulation down at lows. They sold off all at once. They distributed it all in a fairly short time in the late afternoon yesterday. And this was a big print. There was actually 2 trades, almost added up to 13 million shares on SPY, pretty much at the highs of the day. So we're going to use this as our line of demarcation. 194.83. Any trade, a sustained trade above there is bullish. Although obviously we're quite a bit below that now. We're bearish below that level, and we're quite a bit below that. So we'll remain bearish until that number is challenged. Basically, we don't want to front run. We like to wait for big prints and follow them. So we went short in close and after hours yesterday, and we made money today off of this. So same thing happened in QQQ. You saw some, you see a bit of a different pattern here a little bit, because you had a big trade here and then it dropped, but immediately it popped back up and there was some more accumulation, and then we gapped up, of course, right? And then we sold that gap. Now, interestingly, some of these prints are coming in. I don't know whether this is an attempt to stick save the move here, but these prints, 101.50, 101.56, are above the level of this big print. So, we're not really crashing down. We're coming back down to test this level. So, use this level as your line of demarcation on the Qs. 101.33, 34, that kind of area. Some more trades coming with 101.21. Below that, certainly we see a good move down. But until that happens, we have to be a little bit cautious. IWM was a funny little guy today. So, lots of sells yesterday, millions of prints, the highs near the end of the day, same pattern as SPX, not as big size, obviously, but it's IWM. It's not traded as much by large institutions as the SPY is. But anyway, we've had a lot of block trade activity in the kind of middle zone. And whether those are additional sells, new shorts, or covering, or what, you know, or the start of an accumulation to move up, you know, IWM looks the most healthy because it's well above the level of these large block trades, you know, 99.93 level, or, you know, we're at least $1 higher, or almost $1 higher. We're above the level of all these trades still, so, you know, we can't be massively bearish on IWM until these kinds of levels break, and I would say below about, you know, high 99s, then look out below. So yeah, the volatility ratios, what are they telling us? This is a feature on our, if you go to the daily, you go to daily volatility and volatility ratios. We have some other charts you can see what VIX and VXST and so on are doing there. But I like to look at volatility ratios because they tell you in terms of the shorter day, you know, VXST is the shortest of the VIX index, volatility, implied volatility indexes. Then comes VIX, and then comes VXV, and there's some others. But basically, this is 9-day implied volatility versus 30-day implied volatility. So, you know, we're starting to get a volatility move here. So it pulled up off the bottom. It's nowhere near the top Bollinger Band. So it says that this volatility move has some ways to go. The VIX to VXV has come off a bottom close to the bottom Bollinger Band and is turning up. It may be a little clearer if I do that. So yeah. So basically it's turned up, and VIX was oversold relative to VXV, and it's starting to move up. So the volatility, these are agreeing, these are confirming that we have a move up in volatility underway. So where that goes to, we don't know yet. We'll see how long what the duration of this move is. So SPX was overbought relative to VIX, so that was a very easy turn to see. When it hits the upper or lower Bollinger Bands, it turns, or very nearly so, and we generally look for these turns. So this is confirming what this is doing, because it's in reverse. This is SPX was overbought, you know, relative to volatility and the VIX, and so now it's turned down, and you know, we may be targeting as low as the lower Bollinger Band. So keep an eye on this chart. When down moves are very, very, very overdone, or up moves are overdone, you'll see these at extremes. So, you know, we had a huge move straight up in SPX with really nothing like a decent pullback, and, you know, at minimum we need a corrective move to the middle line, something like that. I think that's going to be it, because Datatraderpro is not feeling that well. So the other thing is, I want to thank, we have a bunch of new users, and thank you for signing up. If you have any questions, please email us. You can find us through the contact on the site. Also, we have a YouTube channel where obviously you're going to find this. And I post these wraps on the StockTwits and the Twitter pages when I do them. I try to do them often, but I haven't done them as much as I'd liked. The goal is going to be to do a daily wrap every day. So anyway, thank you very much for joining, and we'll see you tomorrow.